Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who have subscribed to the channel. I really do appreciate it. If you haven't done so already, go ahead and hit that subscribe button down below, hit that notification bell so you're notified whenever we post any new videos. And if at any time you appreciate the content of this video, go ahead and hit that like button and share with anyone that might find value in the content here. For those of you who may be stopping by for the first time on this channel, well, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach as well as big purchases whenever I have extra funds from a bonus or side work or something like that. I cover all my investments into this portfolio. That is what this video is, a portfolio update. I put them out every Sunday. So again, hit that subscribe button if that's something you're interested in. I do have a Webull link down below. You can use that link if you do not currently have a brokerage account. If you deposit some funds into that account, I will get some stocks. You will get some stocks dependent upon their most recent promotion. I do not cover my Webull activity on this channel. It's more speculative in nature. But again, everything that I do is out in the open as far as what I invest in, what I'm buying, what I'm selling, dividends paid out for the week and the month. I put out videos that cover what I'm looking at for the next month as well as we roll into another month. So if you haven't seen my stocks to buy for December video, go ahead and check that out as well. And let's jump into this portfolio update. We added $1,300 in new funds. And let's take a look to start off with what dividends, if any, were paid out last week. So we did get some dividends paid out the 1st and the 2nd of December. The total for those two was $79.87. And the payouts were from Intel, ticker INTC, out of the information technology sector. They paid out $18.98. And we do have the DRIP set on. And for those who don't know what that stands for, that's Dividend Reinvestment Plan. It basically means that automatically, whenever a company pays out dividends, those dividends go back and repurchase shares of that stock, even if it's fractional shares like the dividend payout of $18.98 picked up 0.62539 shares of Intel Corporation at $30.34. And then the other company that paid out dividends was Enbridge Inc., ticker EMB. This company is out of the energy sector. It paid out $60.89 in dividends. Again, automatically went back in and picked up 1.50463 shares of Enbridge at $40.46. And with those new purchases here from the portfolio, so this is purely passive income, dividends paid out by the existing shares of the companies here, Enbridge and Intel, respectively. This is just passive income. The portfolio is now generating every time that the month rolls over where these companies pay out, I'll get more, a little bit more, even if I no longer add to Enbridge and no longer add to Intel. It will continue to grow and add passive income. So these purchases made by the portfolio, the $79.87, works out to $6.80 in future income. This is more passive income. So the portfolio generated this $79.87 in passive income, and then it will turn around and create $6.80 in annual passive income as well. So that's that snowball effect, right? The portfolio itself producing dividends that will produce future dividends. That's the great thing about dividend investing, dividend growth investing. As long as the companies continue to pay out growing dividends, the snowball will continue to grow regardless of how much money I continue to add to the portfolio. So those were the dividends paid out. Now let's jump into what we actually added in new capital. And as we saw in the first slide, we did add $1,300.31 to the portfolio. And those purchases were all made on November 30th, the last day of the investing month for November there. We added 10 shares of Enterprise Product Partners, ticker EPD. This is out of the energy sector. We picked up those 10 shares for $24.65. We added 20 shares of Ally Financial, ticker ALLY. this is out of financial sector. We added those 20 shares at $25.90 per share. We added 10 more shares of Intel Corporation, ticker INTC, out of the information technology sector. This was one that actually paid out as well. So we added more shares, and Intel paid out dividends as well. And we added those 10 shares of Intel at $28.66. And Realty Income had a little bit of a pullback down below my cost basis, so I added 4 more shares there. Realty Income, ticker O, and we added, this is a REIT, and we added those shares at $62.33. So with the new funds, the new capital added, the $1,300.31 added $69.50 in annual passive income. So total invested $1,300.31. And the total passive income from the new purchases, as well as the purchases, or as well as the dividends paid out that we saw on the previous slide, comes to $76.30. Again, purely passive income for doing nothing but holding stock in good growing companies that pay dividends. Now let's look at a quick overall portfolio update. Currently, the portfolio sits at a value of $102,433.15. The dividend yield is a nice just over 5%, 5.039% dividend yield. And again, this is what it's all about, whether the market's up, down, floating sideways. This annual dividend income continues to grow by the new funds that I put into the portfolio, by the dividends paid out already in the portfolio, and by the shares repurchased with the DRIP, dividend reinvestment plan, purchased by those dividends paid out. So again, if I stopped adding right now, this annual dividend income would continue to increase quarter after quarter. And in the case of Realty Income, it's a monthly payer, so monthly, month after month after month. And the annual dividend sits at $5,161.26. So very nice to see that continue to grow. The whole purpose of this portfolio is this annual dividend income, like I said, whether the market's up, down, or floating sideways. And actually, I prefer it when the market's down and floating sideways, because I'm able to pick up this or increase the annual dividend income faster. I'm able to pick up shares with a higher yield at a lower price and higher future potential returns. It also, believe it or not, as company share prices come down, decreases the risk in that company as well. Because if you're buying those shares for less, then obviously your risk of buying overvalued shares are lessened as well. So let's look at the portfolio allocation, the breakdown by sector. Communication sector is sitting at 9.43% of the portfolio. Consumer discretionary is sitting at 8.49%. Consumer staples is sitting at 6.38%. Energy is sitting at 8.52%. Financials is the largest slice of the portfolio at 15.40%. Healthcare is sitting at 9.37%. Industrials, the smallest portion. Well, I guess not. There's a couple that have 0%, but industrials is sitting at 1.69%. Technology sitting at 13.02%. Materials sitting at 13.67%. Utilities, I guess, would be the smallest. Utilities and ETFs, I don't have any positions in either one of those, so a 0% there. REITs, real estate, sitting at 14.03%, and ETFs, again, sitting at 0. Though I do like SCHD, and I am looking at a couple different utilities, but I want to wait for them to hit the right valuations there. So really, that is it for this portfolio update. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. What did you do in your portfolio this week? Did you have any dividends paid out? Did you add to existing positions? Did you open any new positions? Go ahead and drop it all down below in the comment section. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics. If you'd like me to look at your portfolio, I can shoot you my email link. You can shoot it over, remove your personal information. I'll do a review. I had a recent portfolio review request from one of my subscribers, so I don't mind doing those as well. Or if there are stocks that you'd like me to take a look at when they pull back on the day, or do a deeper dive, go ahead and drop all of those down below in the comment section as well. And again, if you have some constructive criticisms, anything you don't like, go ahead and drop it down and I will take it into consideration. I do read and respond to the questions myself. And again, I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, I hope you are having a great weekend and off to a wonderful start in December. Don't forget, Christmas is coming up soon. So happy holidays, happy Hanukkah. If you're not someone who celebrates Christmas or whatever your holiday preference is, happy holidays to you. And don't forget, shopping season is still open. Still time to get some presents out there for the family members if you haven't done so already. All right, we will see you in the next one. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research, best based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.